Hi, guys. Welcome to the Howie Raised It podcast, the show where we get an inside look at how real entrepreneurs and VCs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Howie Diamond of Pure Ventures, an active early stage VC fund that focuses on consumer and deep tech startups. One of the unique things about Pure is they created a wellness platform for founders. So we talk a lot about why he did that. We talk about founder mental health, avoiding burnout, overcoming depression, and much more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions they're going to ask you. This is really going to help you get ready to raise capital. To get instant access to this, please click the link in the first comment. While you're there, please leave us a nice comment what you like about this series or this episode. We really appreciate that. And last but not least, if you enjoy this conversation and think someone else would too, please share it with them. Hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Howie.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by FounderSuite.com. Today I have Howie Diamond of Pure Ventures coming to us from Berkeley, California. How's your day going?
So far, so good, Nathan. Thanks for having me.
Thanks for coming on the show. Let's go right into it. What is Pure Ventures?
So Pure Ventures is my third fund that's sort of predicated on this idea of, behind every great company are great people. People are the cornerstone of any great business. Somehow in Silicon Valley and elsewhere, we sort of forgot about that. There's a lot of funds out there that have platforms that help the companies grow. And we saw an opportunity to build a platform that helped the people behind the companies grow across various areas of emotional, mental, and physical health domains, leadership development, culture building, et cetera. So it's sort of the evolution of that mission in a sort of realized in a $20 million early stage venture fund with a program that we call Pilea to sort of help in those areas.
Yeah, well, let's go straight into that because I think that is interesting. I mean, I remember when Andreessen came out and then they were sort of going to shake up the venture world and they came out with their services platform, which was like all this back office stuff, PR, recruiting, right? They had a whole army.
Yeah.
I think they still do. I don't know if they've trimmed or whatever. They came out with this whole services platform. That was their pitch, right? Come, let us invest in you, and you have this whole services. And I saw what you guys are doing. I thought it was sort of a different twist or something a little I haven't seen before. So maybe go into what is the program, what's included, how do your access it?
To your point, like Andreessen kind of set that tone of services as services as an extension of invested dollars. And then like every other venture firm jumped on board with that, with, like you said, marketing resources and branding and admin and, a bunch of advocacy on, again, helping the companies grow. I think for a long time, Silicon Valley is like romanticized and glamorized how tedious the founder journey is. And we sort of overlooked, the clear fact that founders are struggling. Founders are certainly not going to talk about their struggles because they have to sort of, convey, they have to make it seem like they have everything under control and they don't want to show any sort of signs of weakness, right? But the truth is, and my journey sort of mimicked this in terms of being a fund manager, is I went through the struggle too. And so for my first fund, I was having very open, honest, candid conversations with my founders about what they were going through, and it mirrored what I was going through. And it was this like beautiful kind of transparent, no bullshit. I don't know if I can say that.
Yeah, you're fine.
Kind of conversation. It wasn't like, oh, we're crushing it, everything's great. It's like, no, like this is hard. And, this is taking a toll on a lot of areas of our personal health and our relationships and et cetera. And we need to show up as a leader to our companies, to our employees, to our investors, et cetera. And just the pressure and, the headwinds of this job is making it difficult to show up as our best self. And so yeah, basically Pilea is an extension of that experience that I had. Also the experience or the conversations I was having with my founders. And I was like, oh my God, this is like a pervasive problem in venture that no one's addressing. And we should build a platform to not only talk about this stuff, because it was very taboo, and had like a stigma attached to it when I first got started. In 2015 was my first fund. Let's bring it to the surface, but then let's actually provide services to help in these areas. And so what that looks like is through this company called Pilea, which started as our in-house service platform. We've since spun it out as a separate organization because there was so much inbound interest from other venture funds, other companies that weren't in our portfolio. We wanted to, if we, the more people we can help, the better throughout the entire ecosystem. We brought on a woman, myself and Jake Chapman were the GPs of the first fund. And then we came up with this idea together. We saw an opportunity. We thought it was just the right thing to do and thought it could solve a really important problem. B, no other funds were doing this. So we sort of saw this as a sustainable competitive advantage to get into great deals. Pre-investment, post-investment, it acts as an insurance policy to make sure the founders are getting everything that they need to flourish. And, hopefully, the companies will grow. The companies that we invest in will get to a further growth point than other companies because of the services that we provide. But we're not the ones to execute against this. We don't have a background in, psychology or coaching or anything like that. So we actually brought on a woman who has a PhD in clinical psychology with a concentration in organizational behavior and development. Her name's Dr. Carrie Sullins. And she, in 2018, basically built this service platform that entails founders doing a 360 assessment on, the areas that they want to work on in their lives, the bright spots, the dark spots, the specific areas they want to strengthen and improve over across emotional, mental, and physical health domains. And then we kind of work with them, or she works with them with her team. It's a separate thing from the fund. And we did that intentionally to sort of create a sort of environment of confidentiality and privacy. So anything that happens in Pilea never gets back to, Jake and I as fund managers. That was a really important aspect of this structure. She has a network of 75 coaches that she's vetted. These are nutritionists, these are physical trainers, these are holistic health coaches, these are psychologists, these are psychiatrists. We even have a Marie Kondo decluttering coach, declutter your life. And then we simply, match the founders with the right coach, and they work with them depending on what their bandwidth is. And we kind of work with them for a year. The fund actually pays for the services. So that was another hurdle. Every founder wants these services, but we're investing in pre-series A companies and they can't justify the cost of them. So we said, cool, we'll subsidize the cost through the fund. We think it's this important. So we'll pay for your services for year one, and then you can continue on year 2, 3, 4, et cetera.
So you've started to answer kind of my next question, which was, what is actually involved in this? Is it a online software? Is it?
No, it's very offline, manual. It's very high touch, white glove, kind of one-to-one personalized services, service platform.
And you said what does it span? Nutrition, psychology? What are
I mean, some of the areas of emphasis that we focus on, again, it's across emotional, mental, and physical health. And within those areas, it's a fitness coach. We believe exercise is really important. It's a nutritionist or dietitian. We believe that's equally as important. There's mental health coaches, psychiatrists, psychologists, holistic health. There's executive coaching. A lot of the coaches that we have in our network are former entrepreneurs that have, since exited their companies and have now, wanted to give back and talk about their experience, work with other younger founders or first-time founders to basically imbue the wisdom that they've learned back to them. So yeah, I mean, there's, again, 75 coaches and lots of different ways to kind of interact with them.
Cool. Interesting. And so you said that others can now sign up for this. So can any startup founder sign up for this? Mm-hmm.
Yep. Pilea. I think the website's joinpilea.com, and you'll see sort of, the menu of services that we provide. And the first step is having a consult with Dr. Kari or one of her coaches, and then kind of gets you started.
I totally get the value proposition. I mean, I remember the first couple of years of Founder Suite. God, it was just brutal. It was, and you feel alone, and you feel, beat down on a daily basis, right? It's
I mean,
just,
you're on an island and you have no
yeah,
one to talk to, and you have to come off like there's a great meme that I saw once where it's like what it's like to be a startup founder. And it's like there's this person riding a lion, and
mhm.
everyone's, I think, like in the caption, everyone's like, look how brave that person is riding the lion. And then the caption from, like the thought bubble from the person riding the lion was like, how the hell did I get on here? I have no idea how to ride this thing. It's like going to eat me.
Yeah, that's great. I like that. I like that. So, it's a cool thesis, and it's very logical, but I'm sure you probably did some, sort of market validation. Like, maybe you don't know this, but I'll ask it anyway. What percent of like startups fail because of, founder burnout or founder
Yeah.
emotional problems? I don't know.
Yeah, it's over 50% actually.
Hmm.
We have a lot of data to sort of support this thesis. Um, and there was a study done a couple of years ago. I forget who the name of who did it. I think it was out of Stanford or USC or something. And it was basically a study of like 10,000 founders, and it was very illuminating in terms of, and for the first time, I think it quantified what founders were going through.
Yeah.
I think it was something like a large percentage of founders suffer from depression and ADD, and out of X% of companies that failed, like over 50% attributed people problems as the main contributor of the failure, and that expands outside of just their own mental health issues. I mean, there's culture building, there's co-founder conflict. I mean, again, it's the people that make or break these companies, and I believe that full stop. And so, really helping in all those areas is super important. We've been trying to find ways to quantify our results. I mean, we've been in market since 2018. We worked with hundreds of founders. So we're currently kind of processing, and the data and using, trying to be more analytical about the impact that we're making. We definitely have incredible like testimonials from founders saying that we would not be where we are today, and the company would not be where it is today had we not had these services rendered to us, which is just a great feeling to get. It's a great feeling to hear that from founders. But yeah, we're trying to figure out how to put that in through a quantitative lens.
Sure. Yeah. This question might seem a little insensitive. It's not meant to be, but is there the possibility of like adverse selection if you're putting out the banner that we've got this unique focus at the fund, we have these support services for depression, mental health, founder stuff, that you're going to attract founders with with some pre-existing conditions, I guess you could say.
I mean, that's
So,
a good question. Probably the answer is yes if we invested in like inbound cold email opportunities. But I think it's actually the opposite. All of our deals are 95% of our deals are referral based through our robust network of investors, founders, whatever. I mean, collectively we've been in the Valley for over 20 years, and a lot of times we get referred top deals because other investors want us on the cap table because we have services that can be really helpful to them. Right. I mean, helpful to the founders, but also helpful to the investors. Because again, just the investors' peace of mind, knowing that, okay, founders are now getting these services delivered to them or accessible to them, affordable to them, et cetera. We know that, they know that now, okay, great. Like they're getting the requisite services that they need and support that they need to kind of flourish, whether they're pre-series A or growth stage, whatever. We've actually literally gotten into deals because of this program, where a founder went to bat for us and said, hey, we need Howie and Jake and the team on the cap table because I need these services and I'm not going to get them. I'm not going to go out and get them on my own. And if this is an extension of a venture firm, like as part of their platform, like that's brilliant. And so we've literally won deals from it.
Yeah, that's cool. All right, let's talk about the fund and raising the fund. Maybe to share that journey. You can approach it any direction you want, but I always like to take the lens of like, okay, pretend I'm an emerging manager. wanting to launch a venture fund, share the story that might help me either inspire
Yeah,
me or give me some stepping
man,
stones.
I feel well. So fundraising is like the worst part of my job. I'll say that. It's like such a grind, and I have a track record now, and it's still hard. It's like there's the macro market elements that you have to take into consideration. But even when I started my first fund in 2015 and the market was booming, San Francisco from 2011 to 2019, I say it was just like, what a special time. I really believe it was such a fertile environment for human ingenuity, collaboration. I mean, every night there was a networking event, there was a dinner, and there was a happy hour. There was just, you go out and then you're just immersed in this really just inspiring environment where people wanted to help each other. Hey, what are you working on? How can I help? What are you working on? How can I help? What interest can I make, etc. So that's like the first thing. It's like right place, right time, I think is really important. I haven't seen San Francisco come back from what it used to be. I mean, maybe it's starting to come back a little bit, but from what I hear, like Miami is the new fertile garden for that. So I've had a very unconventional path to venture. I've always identified as an entrepreneur, but I actually started my career in the music industry. I worked as an agent trainee at Creative Artists Agency until my band Low versus Diamond got signed to a 7-figure record deal with Epic Records in 2008, which is kind of a random, very, go from like rock star to venture. I did start my own music management and licensing company called Lo-Fi Music, which I sold in 2010. But I moved to San Francisco in 2011 and just sort of like I said, completely immersed myself into the startup ecosystem. I worked at a startup studio called SparkArt, where we partnered with companies in a variety of different ways and had an investment arm. And we worked with a Y Combinator company. And just really, those 4 years working at that company was really, really formative for me. I mean, I call it my Silicon Valley MBA. Because not only was I going out and just like meeting everyone and having conversations, but I was learning. And I think for me, like I've always been an experiential learner. I didn't do well in the classroom. I love the idea of getting paid to learn versus going to school. So, I mean, particularly for business. Like I don't want to pay hundreds of thousands of dollars to get an MBA when I could just learn from a company, learn from a mentor, etc. So that's been my kind of like, I don't know, secret to success in a career. I did that in the music industry. I learned at Creative Artists Agency, and I was also the manager of my band. So that helped me be a better manager and helped us get signed. And I did the same thing in Silicon Valley. And so, that first fund that I started when I went off on my own in 2015, I was raising, I had the confidence and courage to go out and do it. I had no track record. I had no, real formal education or training in terms of investment, but I had experience, and I was, situated in a really exciting environment at the right time. And I somehow scratched together $2 million for that first fund. I started super small, intentionally. I just wanted to put some points on the board and establish a track record and prove to myself and prove to my early LPs that I could pick winners. I mean, there was no thesis, there was no portfolio construction, there was no, I was literally just writing 50K checks into companies that I thought were great. And I didn't know it at the time, but it was actually easier to get into those deals writing a smaller check size, because if you're just a good person and you get referred by another good person, they'll oversubscribe on their round, for 30 or 50K. Like it's not a big deal for them. It's not a big deal for the founder or the company in terms of dilution. So I would just go around and ask, hey, what's a deal that you're most excited about? Can I get in? And that's like literally how I built my first fund.
Interesting.
And that fund's performing very well, by the way.
Yeah, that's cool. Interesting. So who are the LPs in that first fund? Was it just
high net worth individuals?
Yeah. Mm-hmm.
I mean, the largest check size I think in that fund was like 200K. And I took 100 meetings and 12 people invested.
Yeah. 100 meetings to get 12 investors totaling about 2 million
maybe 15 investors. I mean, it was a slog, but I was ready. I had the energy. I believed in myself. It was exciting as hell, just an exciting time. And I believe, but it was also a very harrowing time. I mean, this is the genesis of how Pilea came to be, was because I was like, once I raised the money, and look, 2 million, obviously is nothing in the grand scheme of things in the venture asset class. However, for me, first starting out, 2 million from an absolute number standpoint was a lot of money. And I had people who believed in me, and now I had to deliver results for them. Yeah. Right. So I was working overtime. I mean, I was flying to Europe for my portfolio companies to help negotiate distribution deals. Like I was going above and beyond to like really outperform this fund. And I remember on the flight back from Paris, while I was there with one of my early portfolio companies, or like right before I was about to take off, one of my anchor investors pulled out. I had already like started making investments. I'd already paid for legal. I'd already done all this stuff. And man, it was like, and it was just a huge blow that I wasn't ready for. And on that plane ride back, I had like a small panic attack. And I'd never had a panic attack before in my life. And I was like, wow, what is this? I've never experienced this. I think basically like my engine just like, it was like going in overdrive and my engine just like conked out. Had no idea what to do, who to turn to. Again, like I couldn't ask people for help because I didn't even know who to ask. The only person that I can think of was Brad Feld, actually, believe it or not. He was
he's written about mental health.
In 2015, he was the only person in, and as an investor, like talking about, his struggles. And I wrote him, I still have the email. I wrote him like a page email saying, talking about who I am and what I'm going through. And he responded within 24 hours. Like still to this day, I have like deep gratitude for him. And he connected me with Jerry Colonna, who runs a company called Reboot, which is a similar coaching platform to Pilea based out of Colorado. And then Jerry Colonna connected me to a coach in San Francisco and gave me discounted rates to get me on the path of, just to help on my journey, because I definitely needed the help. And then that was like the genesis point of like, wow, I got through that, but that was not easy. And I had to like throw up a Hail Mary to Brad Feld, and these services are not accessible. They're not affordable. They're not custom tailored to my specific needs. Let's do something about this, because if I'm struggling, like all my founders have to be struggling even more so. So that was like the silver lining through all that. Was pretty amazing.
Yeah. Interesting. When you told me about investor pulling out and having a panic attack, that reminds me when I was raising our seed round, I had been in Florida with my family for vacation, had a terrible due diligence process with the lead investor. And I remember the guy saying, well, let's talk a week from now. And I remember being on the flight back to San Francisco, and I had to quickly get to the office to do the call. And like, this is just, he's going to pull the term sheet. Like the whole, 6-hour flight from Florida, I'm like head in my hand, almost crying. Turns out they didn't, but it's still, it's like, I know that pain.
No, it's crazy. Yeah. But then from there, look, we got, that the first fund is performing at a 6x TVPI. I've already returned 1.5x DPI. And, obviously that helped with the confidence of like, okay, now I think I know how to pick winners. Now let's put together like, a cogent kind of like thesis and strategy around how we're going to get into the best deals, assuming we raise more money, and we can't just come in on the back of rounds for 30K or 50K. Like we wanted to just write 100K, 250K checks. That's my second fund with Jake. We raised 10 million for that fund. And that's what, again, that's where the whole sort of, founder mental health, people related platform came to fruition through that fund. That fund was a 2019, 2020 vintage year. So like the COVID, beginning of right before COVID, and then COVID is when, luckily we raised before 2020 hit. So like we had the money and we had all the paperwork signed, at least I'll say. We had all the commitments prior to 2020 for a $10 million fund. And then we invested most of that in 2020 and early 2021. And luckily our LPs were able to, fulfill their commitments, because that was also a bit of a,
of course,
unsettled time, I'll say.
Unsettled time. Good. And was that also high net worth folks, or did you
high net worth family offices? Yeah, we were just sticking to that. And then similar to this new fund, which we closed about 8 months ago, and we're basically 90% deployed. This is a $20 million fund. We changed the name just hopefully it's not too confusing. The first fund was called Alpha Bridge, and then we got a cease and desist letter from another Alpha fund, and so we just changed it to Pure Ventures. And that's a $20 million AUM, and same exact thesis. If it's not broke, don't fix it. Except writing $500,000 to $1 million check sizes, 22 companies in the portfolio, looking for 3 to 5% equity positions, and and then still working with Pilea on the platform side.
And so this last one, same question though, is family offices and high net worth, or did you do anything different on
LP? Family offices, high net worth, 250K minimum check size up to, I think we have one LP that's in for $1 million. We have like 65 LPs in the fund.
Okay.
It gets, or maybe less than that. It does get easier as you build a track record, and as you start getting, look, it's all word of mouth, right? Most of it for high net worth and family office. I haven't gone the institutional route yet, and frankly, I don't know if I'm going to. I'm very happy managing 20 to 40 million, 20 to $50 million fund cycles, and I have a really strong grasp on the early stage market. We do half consumer, half frontier tech. I know how to structure deals. I feel good about taking lead positions now. We weren't taking lead positions before, but I feel like in this next fund, if we raise 30 or 40 million, we could start taking lead positions in Series A's. I know how to help companies in these early stages. I enjoy being in the trenches with these companies in the early stages. Like the growth stage is just not my world, and I don't need to do everything. There's a lot of pressure to like raise more money and have a multi-stage approach. And I'm like, you know what? I'm really good with the sectors that I know and the stage that I know. And our team is amazing and small and lean and mean, and we have access to each other. And I don't want to lose that either. And I've heard horror stories about once it becomes institutional, it becomes corporate, and there's mandates you have to adhere to, and the reporting is tedious, and then you have a team of 25 people you have to manage, and it's just like, I don't know, I don't know if that's really me, but
yeah, interesting. Any tips for sourcing LPs? You said mostly word of mouth, but like, was it just happenstance, random, or what?
If you can get into these family office networks, that's huge. If you get one family, there is like a fear and FOMO kind of thing happening, and if you get one family office that invests in you, then the other family offices will hear about it and have FOMO and want to get in as well.
Where are they communicating? Or is it like literally over email? And
it's literally over email. Yeah. There's no platform. There's no marketplace. There's nothing like that. It's just finding entry points into these very elusive worlds and somehow, making yourself known.
Yeah. Interesting.
And it's taking hundreds of meetings, because you just never know where a meeting is going to lead to. You never know. One conversation can like foundationally change the trajectory of your career. That's happened to me 2 or 3 times, literally, where like one conversation changed everything. And there was one time where I wasn't even going to take the meeting. I was like so discouraged. It was my first fund. It was like after 50 no's, you start second guessing yourself, but you can't. Like if you believe in it, you got to stick to that belief, and you got to really have the tenacity and grit and perseverance and determination to get it going, to keep going, because again, like all it takes is one person to believe in you. If you can make one person a believer, that can set off a ripple effect and a snowball into a lot of great things.
Good. I won't keep you too much longer. Any other tips, advice, or the question I always ask, if you were advising your younger self, maybe starting out on that fund one, anything you would tell your younger self to do differently? Or
that's a good question. I think I learned a lot by doing, I don't know if I did the wrong things. I really think it's like especially for a first-time fund manager, unless you have some kind of track record or pedigree coming from another fund, that makes it a lot easier. But if you're just starting out, have a thesis that's differentiated. And then it's like literally selling. This is like selling 101. It's like you have to have energy. You have to be excited. You have to, obviously know what you're talking about and believe in what you're talking about. But just the energy is really inspiring to a lot of investors because, and being situated in the right environment. Like I said, I don't know. I don't know if Silicon Valley still has the same sort of like gusto that it used to have. I think things are distributed a little bit into other cities now. But, if you are providing access to a really exciting asset class and an exciting world, and investors who typically invest in, bonds and low risk stuff, and even some of the alt like into real estate, like this is the most exciting asset class because you're investing in the future. You're investing in really exciting new innovations, and investors want to, LPs want to be a part of the next big thing, and they want to like talk about it at dinner, like they want to feel like they have some agency and ownership into like cool stuff that's being built into the world, and if you're a mission driven investor, you're solving big problems, and it's just very inspiring for investors to get involved in stuff like that because there's no other asset class that can provide it. So I think that's a really strong talking point that I didn't really think about in the beginning, but yeah, I mean, you think about high net worth individuals are mostly investing in kind of like boring, dull stuff that returns, 8% to 12% at the most. And you have an opportunity to not only deliver outsized returns, but also invest in companies that are worth talking about.
Yeah, I haven't thought about that or heard that much. I mean, just the fact that you're, what you're doing is pretty exciting in terms of access to this. I will say one thing. You mentioned the sort of glory days of SF 2011 and so on. I went to a dinner last night put on by Founders Network. I'll plug them. We're not related to them, but Founders Network is like this kind of club social network for founders, and a lot of it's helping people who are low, deal with issues like that. But anyway, we went to dinner last night and there were 50 or 60 founders there. People had driven from all over California. Even I was sitting next to a woman across from Russia. Guy next to me was from Ghana. Like all these entrepreneurs congregating in Silicon Valley, and it made me feel, it was kind of cool. It was like, this might be, I've been out here like a couple cycles, right? I felt like we were starting another cycle. It was kind of cool.
That's exciting because that's the other aspect of it, like the cognitive diversity, the ethnic diversity. I mean, this was, Silicon Valley for the past 50 years has just been, a lightning rod that attracts top level talent on all aspects. And, there was the great migration happened, as everyone's talked about in 2020, 2021 with COVID, but maybe it's starting to come back now because the people that moved to Montana are like, shit, I'm kind of bored now. I want to get back to this.
I'm really good at skiing now and fly fishing.
Yeah, but I want to like get back on my hustle. So yeah, maybe 2024 is the year it starts to ramp back up, and I'd be very excited for that.
Yeah, cool. I will let you off the hook here, but if people want to learn more, it's pureventuresvc.com. Yeah. And you mentioned, most of your deals come through referrals, but any suggestions on if people resonate with your thesis, how they find an intro
I think there might be something on the website that you can like send us, and in the contact section there's a contact us thing with portal that you can put your name and email and company and message us. So look, we look at all the email, we look at every email, but we get bombarded. There's hundreds of emails we get a month, so it's
sure.
We don't have the team yet to parse through all of them. So that's and we get 25 to 30 inbound deals from referral base. So those are the ones that we're mostly focused on. Not trying to like deter people from sending us a note, but yeah. But yeah, that would be the way to do it, and we'll look at it, and if it piques our interest, we'll definitely respond.
But in general, it's consumer and frontier tech. I think I saw 60% consumer, 40% deep tech, frontier tech, and basically seed round deals, right? So if you're kind of in those general criteria.
Yeah, pre-series A, seed, post-seed, small series A. I mean, like the goalposts have moved back now, so it's, I don't know the nomenclature, but basically companies that are in the like, $10 to $25 million range, valuation range. I guess it's depending on the sector, but frontier tech, it's a little different. We like to consumer, definitely you have to be like post product, post market, like you have to have launched something. We don't invest in like ideas. on the consumer side. On the frontier tech side, we'll take a little bit, we'll take bets on ideas and teams because it just takes a little bit longer to get something out into the market. But yeah, we're focused on those two sectors mostly.
Cool. All right, Howie, this is great. Lots of interesting stuff here, and we'll catch you after you raise your next round. See what and how Pelea's. I'm probably not pronouncing it right, but Pelea.
Yeah. And to that point, like we're thinking about we're thinking about the next fund cycle, and I'm like maybe summer of 2024 is when things are going to start to thaw out a little bit because it's still relatively cold out there. I think we're still seeing across the board. Obviously companies are now tightening their belts, focusing on profitability, et cetera, which is great. It's great correction. I think companies should focus on that. And the companies that are executing that are unlocking the dollars. But from a fund standpoint, I think with interest rates and, unrest in the Middle East, I think another 6 months it's before we embark on that journey again, I think is a prudent time frame.
Have you guys last question, I promise. Have you guys slowed down your own investing pace with this economy and everything?
I mean, yeah, I'm trying to remember. We started out like quick. I mean, I think we invested 60% of the fund within the first like 8 months or something.
Yeah.
It started off, we were like a shotgun. It was great. I mean, we were seeing amazing deals. I forget, what time frame was that? It was before like the bank collapse and everything. It was really like that when SVB went down is when shit started to get weird.
Yeah. Right.
And then our cadence slowed as well.
Yeah, we're seeing that too. Startups on our platforms, just everything's taking longer. Okay, nice to meet you. Thanks so much. And keep doing what you're doing and improving founder health and wellness. So I think that's a noble mission. I like it.
Thanks, Nathan. I really appreciate it. Thanks for having me.
Over now. Have a good weekend. Bye.
You too. Bye.